Hello and welcome back to Insta TV. I'm Anna Kasatkina. You're watching Financial News. Traders were discouraged with the preliminary GDP report from Germany as the economic growth slowed more than expected in the third quarter. Today, UK's tepid inflation data also disappointed the markets. Annual consumer inflation missed expectations, thus knocking down the pound sterling. The UK's Office for National Statistics reported that consumer price inflation came in at 0.9% on a yearly basis in October, down from a 1% rise in September. Analysts had expected the CPI to grow to 1.2%. The CPI edged up 0.1% month-on-month from a 0.2% gain in September. Consumer inflation still remains way below the target level of 2%. On the other hand, market participants are pleased with PPI input data for October as the index surpassed the forecast. The indicator of factory prices jumped 4.6% last month against minor growth of 0.1% in September. Analysts projected the index to rise by 2.1%. Meanwhile, traders are exercising caution about going long the pound sterling. This trading sentiment makes the beaten down pound hover at its lows. Having hit an intraday low at 1.24, the pound-dollar pair recovered to trade at 1.2440. Currency strategists expect the pound to rebound slightly against the US dollar in light of comments by Bank of England's Governor Mark Carney. To begin with, the markets calmed down as the governor assured them that he will remain at the helm until 2019. Recently, the head of the British regulator was going to resign, that sent the pound into a downward spiral. Besides, Mark Carney stated the key interest rate would be changed depending on a situation. This provided investors with a clue about a possible revision of monetary policy by the Bank of England in the future. However, it is still too early to speculate about such changes, as the UK is to go through a procedure for the exit from the EU with minimal losses for the domestic economy. In light of Donald Trump's victory in the presidential election, British Premier Theresa May is likely to change her rhetoric. This was Daily Financial News on Insta TV. Thank you and goodbye.